So hello once again traders, Patrick Maldonado here and welcome back to the TCE Trading Podcast. Thank you again for listening to this podcast. I hope you have enjoyed the previous episodes and definitely let me know what you think on the reviews and YouTube comments. So in today's episode, I will be highlighting some of the advantages of trading. I will be talking about things like mobility, time flexibility, things like independence, and salary limitations. So as you may already know, I am a full-time trader. I trade my personal account. I also trade my professional account with this prop trading firm while also being a trading mentor / trading coach for newcomers and beginners. So I will give my own personal experience on these topics and how I have used trading to my advantage. I hope that you enjoyed this episode of the TC podcast and if possible leave a review as it helps me grow the podcast and its reach. So traders, let's start with the first topic. So mobility. It is one of the things that will really depend on your lifestyle. Now, what I mean is that if you are settled, most likely you will have a desktop computer in your house, you will have your own home, you will not really be trading on the go, right? Because that's your lifestyle. But the good thing is that even though you have a home setup and everything, trading on a laptop is very viable. For instance, you might have seen a lot of traders or might have seen a lot of pictures of people who say that they're traders having a lot of different displays, having a lot of monitors and these huge setups, but in reality you can trade with only a laptop. That's how I do it most of the time. So, and most people nowadays, they really have at least one laptop, and all you really need for trading is literally that laptop and access to electricity to plug your device and some decent internet. So I just want to give a brief example of how I've used this to my advantage. Pretty much I've been traveling for the last couple years. It was even before all of this pandemic happened. I was traveling across Europe. I was working last year on France. Then I moved to the UK to visit some friends. Then I went to Spain to visit another friend. Then we went through it was again France, then I believe it was Belgium, then we went to the Netherlands, Germany, and then Italy, and so on before I went back to Mexico. And the point here is not me really bragging about the situation that I have been traveling around, but mainly to tell you that even though I was traveling, even though that I could be like, or I could have been like, I just want to enjoy my holidays. I don't want to do any type of work. I've worked before, so that's pretty much the time I wanted for myself and my friend and enjoy. I also wanted to give it a go to try and trade while traveling. Now I did this in order to vision myself doing that in the future, right? But something that I think that it's not enough is to envision yourself doing something. You got actually to do it, right? It's all about the mindset of wanting to become a person or really believing that you are that person. And this is something very important because if you envision yourself being another person, then you are putting some distance between you and that objective. So instead of doing that, if you start doing it, then you can say, hey, I'm actually that person. So that boosts your mindset a lot. And to be honest, this is what I have been doing. And most of the time you might think, well, it's very cool to just go and travel while working, but in my specific case it has been mainly about how unstable my life has been. I've been saying in the previous episodes that I've been going to the UK to study. I have been rejected, then I went to France, then same story, then to Canada, similar story because of this bureaucracy and so on. But to be honest, trading has been something very good because I have been able to go all these places and still trade on the go. Now, the second thing that I want to talk about is time flexibility. So in regard to time, as you might expect, there is a lot that you can do. Now, time flexibility will also be dependable on your trading style, but the good thing is that you can adjust it to your specific lifestyle, and that's what trading allows you to do. For instance, Something I always tell my new students is to try and reflect on their lifestyle. As an example, if you have, let's say, a full-time job and you really do not have time to be on the computer very often or for a long period of time, then you can try what's called a swing trading, which is a more long-term approach where you can analyze the market, set pending orders or automatic orders, and then check and manage your position whenever you are free. So on the other hand, if that flexibility is not your style, if you want to go fully into trading and have plenty of free time and you just want to really trade for some hours and then be done with the day and forget about everything else, you can also do so. You can try what's called day trading. So this type of trading is mainly for short-term positions, so the positions can range between, let's say, maybe 1 minute, couple minutes to couple hours, but the important part is that it will be done during the same day. Now, the advantage to doing this is that you will be able to have a more fixed schedule while also have time for other endeavors or even part-time jobs. So you will be able to choose, let's say, I want to trade for 5 hours during this time. So that will have that will allow you to have a more fixed schedule. If that's what rocks your boat. In any case, in reality, when it comes to time, it really depends on you and how you adapt trading to your lifestyle. Now, in my particular case, I've already said I focus on swing trading as I work on other side hustles. I work with my students. I work developing the web page. I edit videos. I edit the episodes of the podcast, etc. So this helps me being flexible enough to do that and exercise and have a balanced life suitable for me. And in my personal opinion, my personal lifestyle, I like to have these flexible routines. So as long as I finish what I have to do before the end of the day or before the end of the night, I am happy. I'm not a person that I'm like, I have to do it by this time and that's it. As long as it's done for the day, I feel that I've accomplished something. Now, next topic is independence. Now, in terms of independence, you will find that it's kind of a double-edged sword. And the reason is because when you are trading or if you are a trader, you are responsible for any decision you take. For pretty much anything that you do, you are responsible. You are your own boss. So you are the one who push that either buy button or sell button. You are the one who says, I will enter the market now, or maybe later. You are the one who set up your own hours, your own trading hours. So this end up being very good in principle because you can allocate your time as you see fit. Plus, you can combine what I already talked about in terms of mobility, in terms of traveling and time flexibility. Because if you think about it, not a lot of people have the luxury of deciding all of these things. If you have a normal 9 to 5 job, you will have a set or a fixed schedule and it's pretty much forced to you, right? Whether you like it or not, you will have to follow it, because if you don't, well, you're pretty much fired, right? Now, the other thing, the other side of this good thing, kind of like a disadvantage, is that, as you might expect, everything is your responsibility, right? So, and what I'm talking about is more specifically regarding your discipline. It's more specifically regarding your habits, more specifically regarding your risk management and your trading psychology, because everyone, literally everyone, wants to have the freedom to do what they want whenever they want, but not everyone and have this mindset to do it in a way that it's successful, right? You really need to keep this learning mentality and always aim to learn more and improve whenever you can, right? It's all about improving. It's all about saying, okay, which is the skill that I want? I've learned this, but how can I improve? How can I become better? That's really the catch with independence. Now, the last one, which is a very, very interesting one, is no salary limit. So what do we mean by this? When it comes to money, to be honest, I hate how a lot of people portray trading, and this is a topic that I have been talking about in previous episodes, and you might, if you are a student, you might also hear from me. when I say about the marketing. So as you will see on social media, people often associate trading with luxury. They associate trading with being wealthy and potentially having, a lot of sexual partners, alcohol parties, etc., etc. Now, I have talked about the marketing and how I want to change the industry, but in principle, some of these things they are kind of real in terms that there's no real salary limits. Now, all of this comes with a caveat, of course. Uh, Now, does this mean that you can become a millionaire in a couple months? No, not really. But this means that your growth will depend on your progression as a trader mainly. Now, let's bring the example of a 9 to 5 job. Your boss or manager will always dictate what your value is. So you might want to ask for a raise, but usually if a company hires you, it's because you make them more money that they are gonna be giving to you. And I mean, you can't be mad at that because that's how profitable business works, right? That's just business 101. Now, if we talk about trading, it is true that there's no rigid limits, there's no one telling you, hey, this is how much you're gonna make, but there are still some things you need to take into consideration. Now, your profits will depend on the following factors. First of all, your trading capital, how much you are investing, your risk management, how much you are exposing, and your trading psychology, meaning how disciplined you are. Now, the more money you have, the more money you can safely make. And this is one of the reasons why usually people who are already rich can become even richer. It's just natural because as their capital increases, their exposure or risk management can go down and keep yielding good profits. Uh, this is why I said in previous episodes that if you have an account of $1,000, do not expect be making 100,000 per year if you are only risking 1% or $10 per trade, right? That's just not how it works. That's just illogical. Now, the other important thing is your trading psychology. And what I mean by this is how you cope with the losses, if you are consistent, if you are disciplined enough to follow your strategies and your own rules. And if you are reckless and do not obey your risk management, trust me, and it can happen, you can even blow your own account. So it's very important that you take into consideration this part of trading, which is trading psychology. Now, in the beginning, maybe you will think that you won't be making a lot of money, but the good thing is that you will be able to use compounding to your benefit, and that's again something that you can't do in a traditional 9 to 5 job. So, for all of you who are new and do not know what compounding is, compounding means the more your account grows, the more you will be earning because of the growth is based on a percentage rather than a fixed quantity, right? So if you have a job and I don't know, you get paid $2,000 per month, that's fixed. But if you have a trading account and you are making, let's say, 5% and that equates to 2,000, next time you're gonna have whichever account plus 2000, so that 5% is gonna be a little bit higher, so it's gonna be growing over time, which is something that's very important. And this is probably the thing that really separates having a fixed 9 to 5 from trading or investing in general. Now, just before finishing this episode, I want to use a compounding calculator to see how this works in reality so that you have a better understanding of what potentially you could achieve. Now, let's say you have a moderate initial capital of $1,000, as we have been talking about, and you're aiming to make 5% every single month. Now, a lot of traders, they might do even better, to be honest. Some of the professional traders can even do up to 15% every month. That's a lot. 5%, I think, is a very good amount. It's not as conservative, but it's very good to start up. So if we assume that you have no losing months, then at the end of the year, those $1,000 will become almost $1,800. Now, you might think that's not a lot of money for working an entire year, right? It's only $800, but in terms of returns, you are almost having 80%, which is incredible performance. Not a lot of assets will yield that in that time. So If you continue growing at that pace, you can have around $18,700 at the end of 5 years when you initially started with just $1,000. That's just almost 19 folds your initial investment. That's just crazy, right? Again, now let's say you combine your trading with a part-time job or a full-time job, and every single month you deposit just a small amount of $100. So let's see how all these dynamic changes if you have that perspective of treating your trading kind of like a saving account as well. Now, your first year you will see an amount of almost $3,500. But if we fast forward again 5 years, you might end up having nearly $56,000. And that's just, again, that's the strength of compounding, which is something that very few jobs have. In fact, none of the jobs that you have a fixed salary have. Because of inflation, you're going to be having an impact on that. But the point that I'm trying to make really is that as your confidence and your capital grow, you will not really have a limit given by someone else. The real limit is your commitment in capital and your performance. So you might think that you don't have enough money to start, but even if that's the case, even if you don't have a lot of money and you say, hey, I want to go fully, there's other ways that you can have a lot of money in order to trade. There are prop companies out there that they will give you capital to trade, and they will take some of the commission that you make. So if you make, I don't know, $1,000, they might be taking 50% of it. But even though if you don't get in all the profits that you make, you will have leverage in your account, right? Because instead of you trading your own personal funds, which might be $1,000, maybe a company can give you $100,000. So all of a sudden, that 5%, even without the commissions, look very, very good. In any case, traders, I hope that you enjoyed this episode of the TCE Trading Podcast. I hope that by now you have a better understanding of trading and its real possibilities. If you are interested in learning how to trade and you are not sure where to start, check out our webpage at www.tcetrading.com. Thank you very much for listening, and I will see you in the next episode. Take care.